Hey, I'm Big B and I Brick, and welcome to That Other Lego Show. We got our guest of the night, TMX Brick Notes, in the house. He's going to be talking numbers, digits, and amazingly enough, yeah, we are actually going to cover accounting questions in relation to owning and operating a BrickLink Lego store. So, like, look at this, like an actual, real, amazing topic. Seller stream as requested. That's actually been the most requested thing for me so far in the past 3 months. Like even after I scored Zany to be able to come on and co-host, the question is like, okay, now do seller streams with Zany.
Well, this is perfect. So that's what everybody wants, and now you're putting on the pressure here.
Yeah. So it's actually good because we got a whole a big long conversation that a number of us had earlier this week on Instagram, just asking tax and accounting questions in relation to a Lego BrickLink store. Amazingly enough, it was a freaking inflated topic. Got Howie here. Howie was involved in the conversation as well. I forwent grabbing Ozzy just for two reasons. One, he's in Australia. Two, he doesn't sell Lego, so I didn't know if he wanted to even view or watch or anything, since this is definitely going to be seller and selling related as Aztec to the taxes, numbers, digits, columns, and stuff like that TMX is going to clue us in about.
A little bit. Hey, what's up, Howie?
Hey.
How you doing, man? Hey, before I forget, Howie, I gotta send you my sig fig. So, let me get your address before we let go tonight, or send it through Instagram or something like that for me, please.
Yeah, I'll do that.
All right. Striking up behind the scenes deals in front of everybody here. So,
man, do you have the whole conversation? I can't even get the whole conversation to pop up.
Oh, it's ridiculous. It goes forever. It's a long conversation we had on Instagram, and there were quite a few people involved. I'm not going to give like shout outs to everybody, but it's interesting that we were talking about taxes and accounting and all that stuff, and a lot of people had questions, a lot of people had insight, a lot of people knew stuff. And then there were some different perspectives on it. And Howie, like you talked about keeping records. So, I mean, that's something that's probably the most important thing to do, is be organized and keep records, right?
That's right. Which I probably do the least.
All right, it's popping up for me here. Yeah, we even had Bricks Anywhere was even involved in the conversation, helping out with some things. So, the initial question was, seller's question, how good are the tax write-offs from BrickLink store at offsetting the cost of, say, $150 a month Lego hobby? First of all, like, who the fuck are you kidding right there? $150 a month, whatever. In other words, I'm considering opening a BrickLink store to offset my addiction. What were the write-offs for office space, shipping, materials, inventory, infrastructure, internet, cell phone, inventory purchase, etc.? List any more if I'm missing any. Offset $150 a month, have it alone. After a few minifig sales on top of write-offs, would I break even? So, go.
Yeah. Howie, did you want to start?
To me, it sounds hassle for a hobby side of it. A lot more extra work having to put in.
Yeah, it'd be a lot of extra work to transition it from the hobby to a filing as, or what would be the term for that, Martin?
Oh, to go from like a hobby to a legit business,
Mm-hmm.
you essentially would register your business, sorry, it's not on the top of my head, but you'd incorporate pretty much. And so what that really means is then when you do your taxes, if you are just doing taxes for yourself, you use your social security number not only for your personal income, but you use it for any business that you do on the side. Your social security number is your EIN, which is your business security number. But when you incorporate, whether you make an LLC or a corporation or whatever it may be, you get a new number, and it's like you're two people. And somebody asked LLC, that's a limited liability company. That essentially protects you, and we're going a little further than BrickLink here, but if you set up an LLC, you're protecting yourself from your business failing and having debt. Like if your business just owes a ton of money, well then you don't owe the money, just the business does. So no one's going to come and take your house.
But that actually is something that people should consider if they are going to be running a BrickLink business or any real business that might risk that.
Yeah.
How hard is it to open up and form an LLC? Anybody know? Anybody?
I don't know how difficult it is. Sorry.
I was going to say it probably varies by state.
Yeah, I think it does. In fact, a lot of people incorporate in, and they don't do it in the state that they live in. And I can't go into all. I can't go into all the details. My background is not a CPA. I'm not a tax accountant, but I do accounting. I'm a controller. I do financial accounting, so I do the balance sheet and income statement. And I had to take all the classes, or not all of them, but a lot of classes for doing taxes. And then the crazy thing is the tax code is insane, and it changes year after year. So, but I think a lot of people incorporate in Delaware or something like that. Maybe it's free to do so, or it's cheaper.
The co-host of the show, Zany, is saying it's $200 in a couple of forms in most states. And of course, the liability insurance once you form the corporation and become a limited liability company. But once what that limited liability does is it, like Martin was saying, doesn't take your house when something, whatever happens, when little Joey chokes on a Lego that they bought from you.
Yeah. Yeah, so this is good. I mean, this is stuff that, oh my gosh, even when I'm at work and I have questions on how to do a journal entry, a lot of times I just find myself Googling it. And if you can kind of either find some good websites to refer to, or you just learn the right terms that you have to use to search for this stuff, you can find out a ton of information. And it can really help you step along the way and figure out the answers to all this stuff. But I think a lot of people probably have questions on, you know, what.
How do you balance the books out? Like that was my biggest question as far as since I do constant reinvestment. Like how do I keep myself in a state of constant reinvestment where I'm paying my fair share like I'm supposed to, but not whatever. You know what I mean? Hopefully.
Well, I think one of the biggest things here is there's different ways to do accountings. There's an international accepted way to do it. There's a like North America, United States way to do it. And then there's, I'm going to do my accounting by cash basis. If you're a small business and you're running in hundreds of dollars, then just do it as cash. And I can explain that as we go on. Essentially, if you pay for something, it counts as an expense when you pay for it. And so if you make some money, that money made, let's say you sell something for $100. Boom. You got $100 of, we call it revenue, income. And then you go right back out and you buy another set for $100 the same day. Well, your expenses now match your revenues, $100 each, which means your net profit is 0. So if you're doing cash accounting on that specific day, you can show $0 income, which means you won't get taxed anything. Well, let's say you didn't go right back out and purchase another set. You got $100 revenue but 0 expense. Well, that revenue counts. You're going to get taxed on it. And if you do that every single day, obviously it builds up into a larger scale. Am I kind of going in the right direction here? Making sense?
Yeah, but it isn't taxed every day or tallied every day like a credit card is. It's end of year, or it's end of year, right?
Correct. And
so you have to make sure that everything's balanced at the end of the year. So you have to spend like a fiend right during the biggest buying period of the year. Sometimes. Not that I know about that.
No, it is perfect though, and it's all based on a calendar year. If you're in business for yourself, because it's the same as doing your own taxes. And so the most simple way you can do it is don't worry about how to handle your FIFO and LIFO inventory. You just worry about how much did I sell in LEGO versus how much did I spend in LEGO in 2016. And you line those two numbers up, you take one minus the other, and that is revenue minus cost of goods sold equaling your gross profit. So that's step number 1. And then again, we're doing this as the cash accounting basis, and that's the simple way to do it, and it's accepted when you're a small business. And then step number 2 is, well, my business isn't all just about spending money on LEGO. I got to spend money on other stuff. I got to spend money on an office. Maybe I made my own website. Maybe I can just show any other expense that the only reason I'm doing the expense is for the business. If you can show that, then you take your gross profit and you chop that down and you make it less and less. And your goal as an accountant is to make that smaller so that your final net profit is what you're actually taxed on, and that's smaller and therefore less taxes.
You can use that word that you wanted to use before, but I said not to. Go ahead and use it.
Well, essentially what you're trying to do is hide your revenue in a way that is acceptable. You know, you're not cheating. You're really not. If your revenue is way up here and you have all of these expenses in the goods that you're selling, and you have all of these expenses in your office and your packaging and all that, or your marketing, you want to capture all of those to offset your revenue. And it all makes sense.
So you want to pay people.
You want to pay people? What?
Yeah. Well, if you have to offset, because that's an expense, right?
Yeah, that's true.
Yeah. So you don't want to necessarily have slave labor like I do.
No, I mean that's a crazy thing, and you're talking about it before. Like businesses they'll spend like crazy at the end of the year or at the end of their fiscal year. For anyone that doesn't know what a fiscal year is, not every business has to use the calendar year, and so December 31st isn't the end of their fiscal year. Like for instance, the company I work for, our season makes sense so that the end of our fiscal year is March 31st. And there's a lot of companies that run through June 30th, and that's their fiscal year. So all of their taxes are calculated for 12 months ending at that date.
Is that because they're going with the single extension?
No, it's actually, I don't think it has anything to do with extensions or anything like that. Essentially, the company sets it up like that, and then it has to be consistent year after year. But let's take a toy company, for instance. They aren't really going to want to use December 31st because they're way too busy. So they might push their fiscal year back to 3 months to the end of March so that they can spend time doing their taxes in their off season when they're not selling much for Easter or whatever else. we have any questions from anybody watching?
Zany had so Martin, let's discuss a good depreciative schedule for LEGO purchases for builders who want to offset their ad revenue.
That's a great question. I don't know the answer to that.
So Zany wants to know what's a good set to buy so I can spend my YouTube earnings on.
Oh, I don't know. Maybe you guys are in the same boat as me, but when I first got back into LEGO out of my dark age, I was looking at LEGO sets, and I wanted this and I wanted that. It was awesome. And now I'm transitioning more and more to BrickLink and specialized pieces to build mocks. So my money goes back into that.
Yeah. It'll be interesting to see what levels I reach, what I have to do to right the ship if I stop buying until BrickLink is repaired. That's currently what I'm doing. Part of hashtag Make BrickLink Great Again is my silent protest of not buying anything on BrickLink. Although I encourage you, the viewing public, to do that. Not to succumb to the not buying, but to just pour it all in. Full paycheck. Just to see. I mean, I was turning every single penny from the store that wasn't, had to go towards upkeep and all the rest of the stuff for the accounting stuff, back into BrickLink or back into the LEGO store or Toys R Us and wherever else, and it was a good chunk of change. I ran some numbers, and it's not enough for BrickLink. It's not enough for BrickLink to miss me by any means. Like, I'm not saying that, but I know there's a number. I know there's a number of buyer or sellers that do the same thing, sort of thing that I do, that are doing the same thing.
Yeah. Well, Ralph's got a good question, but we'll go back to Zany real quick here. His depreciation schedule makes sense if you start to grow your business like Big B. If you were to go out and purchase QuickBooks or something, some accounting software that you're going to be using for 3 years or something like that, if the cost is really high and you're going to be using it for more than 1 year, then you may not want to show all of that expense in year one. You can set up you can accrue your expenses essentially. It's not the same really as depreciation, but if you want to spread out your expenses, you can. A depreciation schedule is another way to spread out your expenses, and that's if you excuse me, if you have something perishable, or if you have something that over amount of time breaks down and wears down. Like, let's say you buy a whole bunch of things to store your Lego in, and you spend $500 to $1,000 on all of your stack-ons. You got to figure out how long is their life? How long are these going to last until I'm going to have to toss it in the garbage and go back and buy new ones? Well, let's say you buy a stack-on for $20 and you buy 10 of them. 10 stack-ons for $20. That's $200. Well, you can show that initial expense right away. That's stuff that you need to store your Lego. But then on top of that, you can actually depreciate it. Let's say you think your stack-ons are going to last for 5 years. So you take your $200 expense, you divide it by 5 years, and now you can depreciate and capture even more expense, $40 per year.
So you're not only, your actual deduction for a $200 item is $400.
Yeah, essentially. Yeah, because you get it on the front end.
All right.
You get on the front end, and you get it as you use it. So you're using up that item.
All right. On the extended side of that, what happens if you still have that 10 stack-on purchase of $20 a piece that you depreciate over 5, but after 5, the new purchase price is 25? Is that an additional? Are you depreciating on 200, or are you depreciating on 250, the future cost?
So you're saying you're going out and you're buying new stack-ons?
I'm saying today we picked up 10 stack-ons, and in 5 years, after these ones depreciate and break, we'll also be picking up another 10. Is my depreciation deduction thingamabob, is that on the purchase that is depreciating, or is that on what I will need to replace it with? The price of what I need to replace it with?
No, that's a good question. It is set on the item that you purchase. You can't say that 5 years from now I think it's going to be this much. You have to say what you actually paid for it.
Now, how do you deal with that that ever-increasing cost of running a business? What deduction or write-off is that?
Are you talking like, hey, I use an entire room in my house, and it is 10% of my house, square footage-wise? Is this an example I'm headed in the right direction, or?
Yeah.
All right, so let's say you have one room in your house, and it's your office. It's all for Lego, that you use it to work. If square footage-wise, that room is 10% of your house, then you can take that as an expense based on what you pay that year for your house in your mortgage, or if it's rent. If you pay $500 a month in rent, or $1,000, let's make it $1,000. You pay $1,000 a month in rent. Well, then your office now is a $100 per month expense that can be deducted from your business revenue because it's your office. So I'm doing the math in my head without telling you guys, but am I making sense here?
Yeah.
Okay.
So another question I had with regards to living space or space within the house was, does everything taxable have to be, or does all space have to be taxable space? In other words, living space. Say that you were doing long-term storage of 5 cases of German football team minifigs, and you had packaged them all up and, you know, double boxed them for their protection and all that good stuff, and you wanted to put it in your attic because it's got some climate control up there, and it's occupying, and with other sets of space in that attic. Is that area now also able to be deducted or written off in some way because it's part of the business's long-term plan?
Yeah, what do you think, Howie? You think so?
Yeah, I do. I've got a storage that's outside of the house that I've got some sets and stuff in that I can include that square footage in part of that. That's what I do with mine.
Yeah, I completely agree. It doesn't need to be living space. That's just the most common example because a lot of people do use their living space, and they don't realize that what was once a bedroom is now counted as an office. And storage space, definitely, whether it's an attic or a shed in the backyard or your garage or just wherever you're storing it, if you can come up with an equation that essentially proves what the allocated cost is to use that space, that is all you need. In other words, what I'm saying is, if you ever get audited, if one of these nerdy accountants ever comes and wants to figure out how in the world you came up with all these deductions and expenses, you just have to have something written down. You know, something to show, hey, I chose to expense $50 a month to store things in my attic because it was this percent of my home or something like that.
Often wondered about if attic is actually legitimate, though, because you said there has to be some sort of value for the space that it is occupying.
No, and you know, and that's a great point.
That's why I asked about livable space in an attic, because a garage is always one that people will go to, but a garage also is, you know, human height and has certain living requirement type codes that go into it. Where an attic, you know.
Think about it from the. No, it is a really good point, really good topic. So think about it from the flip side. If you don't have your attic, and you don't have room anywhere else in your home or your garage to store it, you would have to go pay like a storage unit, or you'd have to pay somewhere else to store your stuff. And so on the flip side, you could say, hey, if I would have gone down to this storage unit, they would have charged me $50 a month. So that's why I said and took the deduction of $50 a month. So it's just a reverse way of thinking about it. But again, if you had something to show your reasoning, that's really...
No, that's an excellent response. Thank you. Like that, just there you go. Moving on to Ralph's question of, when you do discounts, do you count that as an advertising expense? And this is actually really good, because I was wondering, because I do sort of like these exclusive sales to the YouTube community only, or just on Instagram, whereas you have to know about it to take advantage of it thing. Is that, can that, because we have, as YouTubers, and there's an entertainment aspect to that, how does that work?
Yeah, that's a good question.
Good question, Ralph.
Yeah. So discounts essentially are an expense. They're like they're contra revenue. So if Big B is going to sell a $100 order to Joe Schmo, and the same YouTuber saw this YouTube discount and bought the same amount of goods and got a, let's say, 10% discount, instead of paying $100, he only pays $90. So your revenue is $100 because that's what the original price is, but you're getting cash in the door at $90, and you're essentially showing the $10 discount. You know, I think it's important to say at the same time here, for anybody that doesn't know, I believe this is still in place. If you're selling on BrickLink and you have your prices set at, let's say, $1 for a part, and you put it on sale for 80 cents, when you do your BrickLink fees are based on the original price. Am I correct on this, guys?
You are.
Yeah, so I think it's similar subject here, but just something to be aware of for anyone that's why I never liked doing sales.
Accounting math is weird. That one never becomes anything less than one. You know.
Yeah, pretty much. So I think really to answer Ralph's question here is, in the example I gave, when you're selling what is originally $100 worth of stuff for only $90, your revenue coming in is $90, so it's like your expense is already built in.
Right.
Does that sound about right, guys? Okay.
Yeah.
I think we'll go with that.
But you took it. So you get, basically you have 10% in another column too that is also. Yeah. Is that also depreciable? Is that a word? Depreciable?
No, that's not.
It's not a word, or it's not depreciable?
It's not depreciable.
It is a word, yes.
Yeah. So
it's an accounting word too, isn't it?
Yeah. So you know what's funny is, like, this accounting stuff. I mean, you're right. If I was the accountant doing the journal entries on that or whatever it may be, I would show $100 of revenue even though you only had 90 coming in the door, I'd show $100 of revenue, and then I'd make another entry that showed $10 of discount, and that's when I'm talking about that contra revenue. So like it's that stuff behind the curtain that us accountants love to do. We love to do all these extra things where it's like even beyond showing your work. It's like creating just a long paper trail to explain it in a totally different language.
This is why I did it this way.
Yep. It's very tricky. I don't know if that's what Zany's talking about, but that's appropriate.
Well, we're not up there yet, actually. I know where I saw some stuff that he was talking about, but Hypersync wants to know, how does inventory come into play? Technically, it should be an asset. It's easy to put a value on a set purchased at Walmart, but what about LEGO value, BrickLink inventory value? So I touched on this briefly during that long string this week of when you actually do go to parting out a set and you get the BrickLink 6-month average to base upon what it is worth. If you want to go back and go to the brick level, there's two different schools. You can just go, okay, the set's worth this much, the brick is worth this much, that's the value of it, or there's the relative value based upon other items in the set, which is even more difficult, but can also be done based upon calculations. Without going crazy, what would be the best way for a small or medium seller to do it?
Oh, man.
Because there's got to be a formula that you would be able to plug into Excel to do the math for you.
Yeah, there is.
You would never want anybody to have to do this manually, because it would really suck, and it would differ set by set.
Yeah. I have like a long explanation, and I fear like some of the things that I say and I get carried away and maybe say things that make sense to me but not everybody else. Howie, I kind of want to hear some of your input here, because I want to know, because there's really no right or wrong way to do this, but I mean, do you have a system in place, Howie?
I'm actually rebuilding it this year.
Okay.
I didn't have a good system in place, and now that I've grown a little bit, I need a better system in place.
Yeah.
So I'm in transition. I picked up. Clutch put out his spreadsheet first of the year. That kind of how he keeps track of everything. Put out a blank one, so I've started using it, putting it in. But then I'm also keeping up with adding to that and adjusting to it for things I buy and other expenses. So it's kind of right now, because I did really 2 years ago, I'd say, was my transition from hobby to business.
So, Big B.
But I've been doing.
Okay.
I've been since 2011. Is how long I've been doing the home and business.
And so maybe you're like me, Howie. Like when I started selling on BrickLink, I almost didn't even care what I was making the first year or two. I wasn't doing the accounting or anything for it. But as I started to go along and ramped it up and went from 25,000 parts in my store to 80,000 parts in my store, I started to realize, hey, there's some value to throwing in some accounting and making this a little more legit. Big B, do you have a system that you want to share for what you do with your inventory, or did you want me to dive into that?
That I do for my inventory? No, because I also BrickLink a lot more differently than most people, because I not only do the sets and stuff that I get from the LEGO store, but also just all-out Redbeard pirating of stores. So I've got my price per brick is pretty straightforward when I do that.
Well,
it's a weight-based thing. The added value per brick is weight-based based upon what it weighs in the order that it costs to ship.
Okay. I know there are quite a few sellers that base on weight. Saves a ton of time.
Yeah. Well, no, just for the added expense of what it costs for more than the item. So, like, since I'm the purchaser, I don't pay a fee on BrickLink or on PayPal when I pay, and there's no transaction fee for funds from another country if it's all with the funds that are already available on PayPal. So if you're going to buy, if anybody's ever going to go buy overseas, which you don't need to, you just need to shop BB Bricks. But if you do go shop overseas for some strange reason, like because you want to take a vacation, make sure you do it with money that's in your PayPal account, because then you don't pay that transaction fee between that you would otherwise get if they had to dig into your personal account at the bank, because the bank would say, oh, you want this in Francs. It would charge you the exchange rate on there, plus probably like a $3 or $4 fee. So, have you had experience with this, Martin? With keeping money fluid on PayPal in order to avoid some of these extra?
I do, yeah. I always try to make sure I've got the cash in PayPal, and like even before the first of the month, I will do a monthly transfer of my funds to PayPal. Like, for instance, last week I put in my cash that I'm going to be spending in July, so that I don't run down below zero, or I'm not supposed to anyways.
Yeah.
All right, so let's get on to the inventory here, because that's a pretty big deal, and it kind of ties directly into like cost of goods sold. Earlier in the show, I was talking about how you can do it on the cash basis, but what I actually started doing last year was more of a true accounting, like a GAAP, GAAP, which is like a accounting term for doing it the proper way that a business would do it. So essentially how it works is when you purchase your Lego, if you go to the store and you purchase and you spend $100, that is your cost of your goods. Once you sell all of that, it is actually cost of goods sold. And the best thing you can do in accounting is match your revenue to your expense. Not when you pay for it, but when you sell it. So let's say I bought last year, 2015, I spent $10,000 on Lego, and I didn't sell any of it until this year. As an accountant, I don't show my expense last year, I show it this year. I want to match it to the same time that I sold it, so my revenue matches my expense.
Yeah.
So that's how cost of goods sold works, and I can give you some ideas on maybe how to make it easier, because obviously when you're talking thousands of Lego parts, you can't do it part by part. So inventory, and Big B, you were talking about this earlier, inventory is different than your cost. If you buy a $100 set and you part it out, your inventory value is higher, because when your inventory value is essentially the market value. It's what you're putting it up for sale, and that $100 set might be up for sale at $250. So the asset is $250. So if you were to put together a balance sheet, you would have an asset of $250, and essentially you'd have, I think that's what you were wanting to know, right?
Mm-hmm.
So how do you match the expense? How do you match that? Well, one thing that I started doing is I would track how many parts I purchased. So let's say in June I went out and I purchased 10,000 new parts. Well, I would add that to my inventory, and I would say, okay, now I've got 100,000 parts for sale. And what I would try and determine is my cost per part. And you can just use an average. When you're using tons and tons of parts, it's okay to use an average. Even if you're selling minifigs for $10 a pop, your average could be like 3 or 4 cents per part. So when you make a sale and you sell 1,000 parts, let's say Big B does a sale to Zany Bricks, he sells 1,000 parts. His cost of goods sold is you just take your parts sold and you take it times your average. And that's how you figure out your cost of goods sold, and that's how you figure out your expense. And that really goes back to what we were talking about in the very beginning, when we're talking about our revenue minus cost of goods sold minus business expenses, other like our office and everything.
IRS.
So, what's up?
IRS. IRS is the code word of the night for guests and viewers to watch the drink. Thank you, Zany, keeping us on task, even while on paternity leave, keeping us on task. Thank you, brother.
Very good.
Paternity leave, like he gets paid to be on the show. Zany does have a $1,000 appearance fee, though.
Who pays that?
I do every week to get him on the show. Comes out of expenses, entertainment, right?
Yeah, exactly. There you go.
Just like, hold up. Okay, donuts. Were donuts somehow a business expense for me? Howie, go. Donuts and coffee. Should I be writing them off?
Can we deduct Philly?
Oh, we can definitely deduct Philly. Philly is definitely completely deductible, at least for me, because I was using Philly to see how other sellers sell, and see basically because you can't just walk into the job without having a clue. You've got to be able to go and observe. So
right.
That's what I was there for. That's why I was wandering around, not only seeing the Lego, but also just checking out the competition that I'm going to slaughter next year. So.
Yeah. Oh yeah, of course, and like that's a good point. You don't have to be selling at the event to count the event as an expense. Your airline tickets, your hotel, a portion of your foods. There's percentages for all this stuff. And
but what about like going to get donuts and coffee every day?
It's outside of like your normal personal spending.
Yeah, I'm not going to eat 2 dozen donuts. Maybe.
Right, so you can do a portion of it. Yeah, I think it depends. You got to look it up or talk to somebody. I don't know the exact answer. I think it's like 50% of.
Yeah, I would think that would fall under the business lunch category.
Yeah, I think it would too, but it was business breakfast. No, the reason why I kind of also am touching upon this is because there's a lot of other people that went out and got pizzas for everybody, or subs for everybody and stuff like that. And I think that if it comes under the realm of they were using it for their YouTube channel to advertise, is there some leeway there? Is this above board leeway, or am I just making shit up?
Yeah, I mean it's legit. So
like if you were a Bricks for Chris, definitely legit because you're in the 20K plus category. But what about somebody like you or me? You know?
It doesn't really matter how much money you're making or how many subs you have or anything like that.
Okay, that's good to know.
Yeah. So, but there are specific rules around food and entertainment, right? So, if I take you out to eat just to talk about selling and Lego and whatever else it is, I can deduct 50% of that meal. So 50% of that meal counts as a business expense. But let's do another angle. Chad was hosting Philly Brick Fest. Let's say he buys pizza for all of his employees so that they can stay on site and they can continue working.
Mm-hmm.
He can deduct 100% of that because it's used in a different way. Does that make sense?
It's used in direct connection with.
Well, I'm saying the difference is his employees were in a place where they were working. It's kind of a gray area, but you're not going out to eat. You're still on the job site. He's almost inconveniencing the employee by keeping them at work, so he can deduct 100% of it, whereas if he took them to a restaurant or a bar or something like that, then it's only 50%.
Okay, I gotcha.
And that's a tough one. That's a weird one, but...
So, okay, here's one for you. Zany's last order, he got 35% off because he used his regular 20% coupon, the 10% coupon for hashtag Make BrickLink Great Again, and then also the 5% coupon for being a Ligonius patron. Is that 3 separate entries or just one?
I'd probably do it as 3.
I already know the answer to this, but you explain why. You explain why it's better to have 3 over 1.
Business-wise, as the accountant, I would be doing 3 different entries because I would want to be able to have a trail and know how often someone was using each and every coupon. I think that's the short and simple way to say it. Right?
You'd want to see what the coupon's direct effect is upon purchases.
Yeah.
If it's worth continuing, if it's worth doing it. Exactly.
Yeah.
I already knew the answer to that one. The more data you can have on anything, the better.
And the less on paper you can do, and more in Excel or even in an accounting like QuickBooks or something, the better off you are.
Yeah. Although it would be awesome to have said formula to be able to plug in a complete set and have the inventory value for the brick be the actual value. Where each set has a different, you know, we were talking about like method number 2 that's absolutely insane. Like it would be awesome to actually have that though.
Yeah.
Because there's definitely a depreciative value that we all have to sort of take into consideration too with your Lego brick. You know, Ralph was saying before he's constantly having to adjust the value of his inventory whenever he reprices. But honestly, when should you be readjusting that? At point of sale for the sold item, and then during periods of inventory, or constantly?
Well, I mean, that's like a good question. Because BrickLink has it built in that it tracks all of it, it's like continuous inventory updating built in for us. The only thing we need to catch up on is, did any Lego slip through the cracks or whatever else? Is that kind of what you're talking about, or are you talking about like repricing the Lego?
Like he said before, he was constantly repricing in his books, constantly reevaluating the value of his Lego when he would alter the prices in his store. I'm saying that that's a complete waste of time, that a book doesn't need to be kept on that, because you essentially already have a book being kept on that with your online diary of that. Because you can download your store in XML, and I'm sure you can do some sort of import feature of XML into QuickBooks. You know.
Yeah, that would be amazing.
Pretty common. It is a markup language, which means it's made for business. So, but you only really want to record the value of the brick then when it's sold. You're not worried about its age of life unless it dips below what the value of the brick is that you initially purchased.
Yes and no. It's a good question. Like in this business, I think the only way you should really, I think the best way you should do it is an average price per piece, like I was talking about before. And unless you're gonna do, unless you have, you're just a minifig seller, and you're not selling, or you're selling sets. You know, if you the fewer items you have for sale and the fewer items you sell, the more you can get into your cost of goods sold being specific. Like somebody that sells cars or airplanes doesn't do an average price. But for Lego, it makes sense.
Here's a question. CMF based. Someone goes out, buys, and we're going to pretend timeline here, but goes out, buys a set of series 12 CMFs, and they're mountain climbers. You know, they bought them for $2.99. They're selling for $1.50. How do you work that out, where you're actually taking a loss on something that you're selling?
Well, that's how your business loses money. So, and Hypersync has a good comment there too. I'm going to read this. Consider inventory as raw materials. The value is what you pay for it. At the end of the year, you really have to make a scientific, wild-ass guess of the actual value. And he says he sells mostly used Lego, which makes sense. And it goes right along with your example here, Big B, that you purchase a CMF, you expect it to go up or at least retain value, and it may not. So
yeah, I mean, because there's some CMFs that, even though they're cool, they don't sell for diddly. You know, Skydiver, Mountain Climber, two classic ones out of that's Series 12, right, or 11. Anyways.
If we're
like they bought them, then they open the sealed cases now to sell them, are they instantly taking a loss on something they just opened?
Essentially, and you really wouldn't figure that out. You really wouldn't calculate it until the end of the year. If you wanted to do that more often, you could. But I guess it depends, like when and why you want to have your balance sheet and when you want to have your actual inventory value. Because again, to me, your inventory value totally different than your cost of goods sold. And I think this question is an inventory value question. And so you're essentially talking about shrinkage. And George Costanza doesn't like that, but shrinkage is an expense. You're going to credit your inventory, which drops your asset, and you're going to debit the expense of loss of inventory. But if your inventory bounces back the next year, it's different.
Now you're saying, you keep saying inventory value, like the inventory value, but on BrickLink there's the 6-month sales average, and then there's available average. If you're counting your inventory for a value, should you be using 6-month sales average to guess it, or available average to guess it? Since available average is what's available in your store. I'm not saying for sale. I'm just talking about in the books for.
That's a great question. I have an answer for it. I typically use the 6-month sales average to know what actually has happened. But Howie, what do you think is a better number there?
And why would you want to use one number that's obviously higher than the other for any reasons? For bookkeeping wise.
Yeah, so the one that gives you the better deal on your taxes at the end of the year.
So typically you have to use the lower. You have to use the lowest one, and usually the sales average is the lower one. So that's why I typically use that. I mean, it makes.
What is inventory, right? 6-month sales average versus on-hand average,
yeah. I mean, and it's a toss-up. Well, let's say you have
but that would also be based upon the element itself.
Yeah, exactly. And like Hypersync was saying, if you have used parts, especially something that hasn't been sold for 6 months, then you can set the price yourself, and it has to be considerable. But um, again, I don't know. In my mind, putting together your inventory value and knowing how much you have on hand doesn't make a difference to me. It's not really a big deal, especially for a smaller seller. It doesn't, unless you're really trying to sell your store to someone, like your whole business, or you become a bigger business. I would focus more on your sales and your cost of goods sold. And again, your cost of goods sold are different than your inventory. Don't mistake that.
4 minutes. 4 minutes. Give us 4 things that people can discount on their taxes for, as a BrickLink store owner that they didn't know that they could.
Wow, I should have been prepared for that one, but
sorry.
You can kind of blank. Sorry, anything that you spend money on. So let's say that you drive to the post office every day. You can deduct your mileage. You have to track it and write it. But if your post office is 20 miles away, then you can do a round trip there and you can capture 40 miles every single day. There's an IRS calculation to figure that out. So again, you're not doing the gas expense or anything, but you're doing your mileage. If you purchase a scale to weigh your packages, that's a business expense.
Is there some way to take the cost of gas and wear and tear into effect?
That's a really tough one, especially if you're using a vehicle that you also use for personal. I would just say no. If it's dedicated 100% to business, then yes. So
there is
another one of those deductibles, right?
Yeah.
Depreciables.
Business cards, definitely yes, or anything that you're creating to promote yourself. And stuff like that is not a cost of goods sold. It's a business expense, so you capture it right away when you pay for it, or because you're using it right away. And Howie, you said something just a second ago. What did you say?
That was a second ago. So I'll go back.
I'm sorry, man. I just wanted to get you involved more. I don't like it when I feel like I'm talking too much.
That's why we had John, actually.
I'll just say I've been using TurboTax to do my taxes, and it steps to everything on the business side, asks those questions, and I'm pretty sure that on the car it's a percentage value if your car is used for part-time to source or go to the post office, that you can deduct a small, but I think it's one of those that does the mileage that it'll check those one versus the other and give you the better deal.
All right. I mean, that's a good point. You pay for TurboTax. That's another business expense. Did I get 4, Big B?
Sure.
We could probably make this a weekly show to figure this stuff out, but.
Well, no, I mean that's way back when. Like
Your
that's what I thought of the other LEGO show was to become a community show for sellers to discuss what we were and were not doing things with, and then we took it and decided to do fun stuff with it instead. And I want to keep doing the fun stuff. I just because that thread was so intriguing this week, and there were so many people that were talking on it. I really wanted to sort of touch upon that because there are, as a lot of people in the comments were saying, some basics that some folks don't know about, you know, or they're doing it in a different method and they could be doing it in an easier way. So,
Yeah, and we didn't even get to some important stuff, like if your business makes money or loses money, and you can roll forward your loss and stuff like that. But that takes a little more explaining. So, but
Yeah, and that's
it's
a little
out
bit
there.
more high end. But just know that if you're going to be going as a business, you have to be profitable 3 out of the 5 years. Play it above board. Don't take discounts that you don't deserve. Pay your fair share, but don't pay too much. That's it. That's all. I'm Big B at Brick. Thanks for joining.